Is Palantir stock worth buying in 2023? Well, I'm going to go over that, and I'm also going to keep my viewpoints on this company as objective as I can, while still giving you my opinions on this company. Let's also keep in mind that, like the rest of the tech sector, Palantir stock has had a rough 2022. Although revenue continues to grow quickly on paper, Palantir still technically remains an unprofitable company. And furthermore, since the markets are in a risk-off kind of mood, the overall investor sentiment is likely to remain anything but stellar if a company isn't ranking in profits. And Palantir's business model is also undeniably costly at the moment. However, I think a lot of people will be happy to know that Palantir is showing signs of huge progress and is close to nearing in profitability. And thanks to a massive stock sell-off in 2022, its market cap has dropped far enough that a lot of stock analysts are no longer viewing the stock as overvalued right now. So while the journey may be a bit shaky, Palantir is moving towards breaking even financially, which is certainly a great sign for the company. And I think a positive bottom line could go a long way towards boosting this stock. Another positive note when it comes to investing in Palantir though, I think, is for the artificial intelligence software alone. You see, for the problems that Palantir is aiming to solve, it truly is as impressive as it gets. It gives organizations the power to uncover unknown insights from their massive amounts of data, as well as providing top-of-the-line cybersecurity. So with this, I don't think it should come as a surprise that various parts of the US government remain major customers of Palantir. However, extending its offerings to the private sector is what will really open up countless opportunities to drive growth moving forward. Companies can use Palantir to detect supply chain issues before they happen and help them become more efficient in terms of energy and costs. AI-driven software has proven to be an invaluable asset for government and corporate customers and could honestly revolutionize many industries with further developments. And Palantir's growth with companies could also help fix its reputation in the eyes of the public and some investors. You see, in the past, Palantir has engaged in some highly controversial government contracts, at least from the perspective of some people, from a human rights stance, that resulted in a bunch of negative press for Palantir, unfortunately, and could have contributed to sending its stock prices down even further. However, the development of the commercial business will likely be a huge win from a public relations perspective, as people see that Palantir's technology can be used in more ways than just one. And in the most recent quarter, Palantir saw its commercial customer count double from 115 to 228. And if this trend continues, it will honestly be in an incredible position in 2023. Let's also keep in mind that Palantir has plenty of important partnerships as well, with the two latest ones being Crisis24 and WestTrack. You see, Palantir has made significant progress in the integrated risk management sector with the multi-million-dollar deal with Crisis24. And by leveraging Crisis24's extensive knowledge and expertise, Palantir seeks to modernize security and risk management, processing via its Foundry operating system. And meanwhile, Palantir and WestTrack have formed a partnership designed to revolutionize the outlook of Australia's servicing and rebuilding operations sectors. Palantir Foundry here will also provide customers with a robust support network and an in-depth look into optimized customer service. And another important factor to look at when investing in Palantir is that currently, like I've mentioned, their monetary losses are narrowing. The operating loss margins has tended positively in 2022 when compared to 2021. Indeed, its sales and marketing expenses continue to drive a large position of operating costs. However, I think any investor in Palantir should be encouraged that this gap appears to be closing as Palantir's investment in these areas is paying off. And despite some reports of operating losses and a seemingly large 13% margin loss for Palantir, there is some cause for celebration. You see, on closer examination of the company's financials, the operating loss margin is definitely narrowing. 2021's operating loss margin was 23%, but according to 2022's data, this has now been cut to 10%, which is a substantial improvement. And as Palantir continues to grow its revenue, this could be the first indication of a successful path to profitability. So overall, this is my takeaway. I think Palantir, especially at the low stock prices that it is right now, is a definite buy in 2023. As we head further into the year, I believe that the company is going to find itself in a great position. Commercial revenues are rising and losses are narrowing, and Palantir still has a long runway for growth. And with that, I think I'll wrap up the video here. Thanks as always, and I'll catch you next time.